Hey gang, today I'm going to talk about a new ETF that's coming out tomorrow. There's a lot of news about this. It's really hot on Reddit, so I thought I'd talk about it. Now, most of you guys know who Dave Portnoy is. He's a social media celebrity, founder of Barstool Sports, and he announced the launch of a Van X Social Sentiment ETF. He announced it yesterday. Today's Wednesday, and it's launching tomorrow. Ticker symbol it's launching on the New York Stock Exchange. Ticker is going to be BUZZ, Buzz. So I wanted to do a little in-depth review and see what all the buzz is about. So interestingly enough, when I started looking at this, I realized that it's going to come out tomorrow. It's going to hold 75 large cap US stocks. And what I wanted to know was what exactly it's going to be based on. How is it going to be traded? Technicals, fundamentals, is it going to track an ETF? I mean, there's so many ETFs out there. But basically, from my understanding, there's market capitalization of at least $5 billion. Well, if a stock has to have $5 billion market capitalization, it's not really a large cap stock. If you want large cap stocks, you want to go to market capitalization of $25, $50 billion. $5 billion, you'll find Russell 2000 stocks with a market cap of $5 billion. So I don't really agree with his representation that it only tracks large caps. If you wanted to track large caps, your market capitalization would be bigger than $5 billion. And then I wanted to know, so that answers the question of what type of stocks it holds. And Novavax is not a large cap stock. And if it's not in the S&P 500 or the Dow, it's not a large cap stocks. And there's a lot of stocks in this index that are not large caps. And that's very important. I'll explain to you why. Because typically the smaller the stock, the more volatile the stock will be, and the more it has the potential to outperform the stock market. So if you start mixing in stocks that have market caps of $5 billion with stocks that have market cap of $30 billion, you're going to get you're not going to get a very good representation of the S&P 500. You're going to get a good representation of the Russell 2000, the mid cap, and the S&P 500, and that kind of distorts the performance, which is as of right now 1 year return of 78.88%. But it picks stocks based on an algorithm decided by artificial intelligence. And I guess the ones that get the most buzz, and it so far this artificial intelligence is beating the S&P over 1 year, but over a 5-year return, 5-year annualized is 26.45%. So it's looking pretty good. My question is also how much volatility it has and what type of holdings it has. So what I wanted to do is kind of go through the top holdings and see if it makes any sense. So right away we see DraftKings. Well, my understanding is it didn't DraftKings buy Barstool. So his biggest share, which is 3.44, is actually a company that he has some interest in or had some interest in. Then you've got Twitter. That's an S&P company. Then you got Ford, Facebook, Amazon, American Airlines, Apple's, Advanced Micro, Netflix, Tesla. So far, for the most part, it looks like a mix between the Nasdaq 100 and the Russell 2000, because you got the plug stock here, you got Novavax, so you got Penn National. So you have a lot of stocks that aren't really that big. I would call them mid-cap stocks. So the fact that he's saying that it covers 75 large cap stocks, that's just not true. I mean, that's just absolutely 100% not true. I mean, yes, most of these are, but like Nikola is not a large cap stock. Chewy, one of my favorite stocks, but it's not a large cap stocks. And he also has some stocks here that are just dogs, like Simon Property Group. That's a commercial real estate company that deals in REITs. Do you guys know a lot of demand for commercial real estate? So I'm not 100% sold on it, although it has a pretty good diversification. But quite honestly, you could find the same type of stocks in a disruptive ETF. So I'm not really sold on it, although there's nothing really terrible about it, but I'm not seeing anything too impressive. What I do like about this fund is it seems to have a good mix between large caps and small caps, and that's not something you're going to find in a lot of funds. And I also like the fact that it has some blue chips and some investment grade stocks and some speculative stocks that I like. But again, that's going to throw it out of the way. Like Beyond Meat. Is Beyond Meat a large cap stock? Come on, let's be real here. Let's look here, Beyond Meat. Let's see, Beyond Meat. Let's look at the market cap of Beyond Meat. Let's see here, profile. Let's look at the market cap. I mean, it's an $8 billion company. This is not exactly a huge company. But again, I like the combination, and most importantly, I like the fact that he's combining really speculative companies like Beyond Meat, or like Chewy, or like Cloudflare, which is semi-speculative, with some pretty stable companies like Tesla and Netflix and so forth. But again, it's too early to tell. Let's see how the fund trades. Let's see if it picks up steam. But for right now, I would say this is in line with a typical disruptive, like an ARK fund. So I wouldn't say there's anything really that new or original in here. The only thing that really strikes me from looking at the constituents, I mean, we've got a little bit of everything. One thing is, he's got a lot of value stocks, and he has some growth stocks. That's really great. He's not focused on one industry like chips. It's fairly spread out, which is really good, although it's got a lot of technology. But at the same time, it's got some bank stocks as well, like Visa, Goldman, Uber. Uber's a tech. But the point is, it is broad-based. It's not just large cap. 75 stocks may be a little bit too much. It may be it's gonna probably impact. It's going to have a large correlation to the overall stock market. My main concern is risk-adjusted return, and that we're not going to know till it launches, and I'm very concerned about the volatility. But overall, I would say for now, stay away from this fund. Let it trade for a while. Let's see how it does. But I do like the fact that it has a nice mixed bag of large caps, medium cap stocks, and it's not targeted or focused in one specific segment of the economy. It's fairly broad mixed. So for now, let's watch it. Let's see how it's doing. Dave Partnoy, he's been doing well in business. He's done really well with some of the companies he's invested in. So let's see how it does. Let's be open-minded, and let's compare the performance over the next quarter with the S&P and the NASDAQ to see how it's done. Let's see. Quarter return 15%. Let me look and see where the QQQ is real quick. Let's see. Let's look at it on a quarterly basis here. Let's look at it here. On a quarter basis, 10.75. What about the Russell? Let's see here. The Russell is outperforming it. So again, let's see how it does. It may be a nice little combination. So if you don't know if you should be in large caps or medium caps, and you want to have a nice basket of bank stocks, of tech stocks, of airline stocks, it may not be the worst way to go. But some of these stocks like Virgin Galactic, come on, let's be real here. That's a fairly speculative stock, especially right now with what we've seen on Twitter. So be very cautious and let this ETF buzz, ticker symbol BUZZ, trade for a while. Let's compare the volatility. Let's see how often he changes positions, and let's see whether it outperforms, and on a risk-adjusted basis, which is really the key. When somebody just tells you performance, it doesn't really give you all that much. I want to see how it does in terms of risk-adjusted returns. I'm going to compare the volatility with the performance to see if in terms of volatility it is outperforming. But the fact that he's saying it's a large cap US stocks, that's just misleading. It's more of a mid-cap fund, and it has a lot of the smaller stocks that the Russell has as well. So I would say it's a mixed bag at best. But I do like the diversification. I like a lot of the stocks he's holding. Let's see how he does. Now, folks, before I let you go, I've got something really important for you. It shouldn't come as any surprise to you that CEOs, billionaires behind the curtains, they're making secret moves. They're not just doing everything, at face value. They've got secret stuff they're going on, especially high-powered CEOs and billionaires. In fact, new research has uncovered a disturbing truth about corporate America and certain legal tactics they've been using to force the rise of their own stocks. Can you imagine that? But after months and months of investigations, one former Wall Street insider, he finally, he's going to reveal the details he's uncovered about this legal tactics, buying their own stocks. This is very interesting. And this could benefit amateur investors everywhere, people just like you. Follow the link below, get all the details, and follow alongside him. And make sure you like this video, subscribe to this channel if you're watching on YouTube, and stay ahead of the market by being the first to be notified when we post videos. And I'll talk to you guys soon. Bye, guys.